Hey everyone, just going to do a little market breakdown before I head out. I was already out today. I'm trying to avoid being on my computer all day, as spending too much time on the computer, especially when the weather is nice, just makes no sense. So I'm doing a little bit of trading outside of my house, and I'm trying to stick to a few longer term plays. I don't normally like holding for the long term, and just before this, I was planning to just stick to my day trading, but you know what? I've decided at this point that I have enough capital to be investing in really good companies for the long term. And there's no reason why I should be sitting and trading all day risky stocks like penny stocks. And so what I'm going to do is I'm going to take longer term swing trades on stocks that I feel comfortable holding, that I'm not going to have to look at my phone or the stock all day wondering what's going on. And I'm going to be setting areas where I plan to sell, or when the stock gets overextended, or when there's a volume spike or something like that, I will take profits and look to enter cheaper. So that's my plan, so that I can avoid being on the computer throughout the whole summer. And also the market, at least I found, it tends to slow down a little bit during the summer. There's just not as much volatility. And I think we've had a bout of volatility recently because cases were going up and interest rates were going up on the bond yields and stuff like that. And I think we've kind of had our bout of volatility for now. And I think throughout the rest of the summer, this is just a thought. I think we're going to slow down a little bit in the market. There's not going to be too crazy volatility. And what I'm seeing is I look at a lot of these penny stocks out there, and a lot of them got crushed. A lot of them got crushed over the last month. And now a lot of these blue chips, they've been doing very well in the meantime. And what I'm thinking is a lot of people got burned on the penny stocks. And now people are pretty much just tired of getting burned, and now they want to move to safer companies. And that's what appears to be happening, because you take a look at a lot of the penny stocks, they got crushed and they barely recovered, if anything, or they've even gone even lower. Whereas these big companies, the big boys that people know, these are good companies, they've been doing very well recently. And I'm going to be looking a bit at that right now. So we're looking at the QQQ, which is the largest ETF that's tied to the NASDAQ 100. And I like to look at this ETF throughout the day, because whatever this ETF is doing, it reflects the NASDAQ and it affects so many other stocks. If the NASDAQ is going down, many other growth stocks and stuff tend to be going down. It's also good to take a look at SPY. And SPY is tied to the S&P 500, and this affects Canadian stocks as well. Even though these are American indexes, when the S&P 500 is going down, it tends to affect almost all the stocks in the market. So you always got to keep an eye on that when trading and investing, and see how the S&P 500 is looking. So right now I'm looking at the NASDAQ, and I've said the other day, and it played out exactly as I was saying. Go check my other video. We had that consolidation day, and we had a breakout today. The bulls are running with it. They're running up to test this all-time high. Are we going to make it up there? I mean, it appears so, but nothing is for sure. We don't have a volume spike, so it doesn't suggest that we topped. In fact, the volume's actually been going down as the market goes up. And I personally think that's a good sign. See, a lot of other traders and stuff out there, they would say you want to see increasing bull volume. Whereas I actually think it's good to see the opposite. And the reason why is that the fact that the volume is going down and yet the price continues to go up significantly higher tells me that there's not a lot of resistance. There's not a lot of people selling. And so the skies are clear. If there's not a lot of people selling, if it doesn't take much volume to make the price go up a lot, that's a good sign. When it takes higher and higher volume to make the price go up or down, well, that means, in the case of it going down, it takes higher volume. That means there's a lot of support. In the case of taking so much volume to move the price up, that means there's a lot of resistance and a lot of people selling. And like I said a few days ago, goes back to here. Look how much volume it required to move the market lower. Whereas look how much less volume it's taking to move the market up. This means there's a lot of support down here. A lot of people were buying, whereas there's not a lot of resistance up here, and not that many people are selling, and that's a good sign for the markets in my opinion. Tomorrow, I'm not too sure what we're going to see. We're looking at, are we going to pull back a little bit to hold this red line? We're a little bit overextended, but the RSI isn't too high on the daily. The weekly, we're not high. We're not overbought on either of those time frames. Let's check out the hourly. The hourly, we are slightly overbought. Nothing too crazy. We've had this nice consolidation over here, and we've had a breakout. We're looking at another potential breakout over here, higher. The market's looking good overall. I'm not seeing any red flags right now on the NASDAQ. And take a look at some of the stocks I'm watching, and I'm really liking Facebook. Facebook is a bit overextended right now, so I do see the potential that it pulls back a bit. We have a little bit of a bearish hanging man candlestick. In my opinion, if this stock pulls back, it's a good buy. I think it's a good buy either way. As you can see, we're setting higher lows every day, so keep that in mind. Every single day, the low of the day is higher than the previous day. So over here, the low of the day was higher than the previous day every single day for how many days in a row? 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. And so sometimes when it breaks that pattern, that's often a signal that some consolidation is coming. It doesn't mean there's going to be a huge drop or anything, but maybe a little bit of a pullback to cool off the RSI as it's getting a little bit overextended, but nothing too crazy. And I like this stock not only technically because it's breaking out after this several month consolidation since August. So we've had a nice long consolidation pattern, and we just started breaking out to all-time highs. I don't like it just because of the chart. I mean, you look at Facebook fundamentals, and these guys are making a lot of money. Their gross margins are very high. They're pulling in, last quarter was over $11 billion in profit and over $28 billion in revenue, US. That's a lot of money. These guys are making a lot of money, and they don't have any debts. They have a lot of cash on hand. And I think Zuckerberg, he's a weird guy, something about him, but something about him tells me he's got a lot of tricks up his sleeve, and he's still a young guy. He's 36 years old. And, I wouldn't put it past him to potentially see him as the richest man in the world one day, and if you don't know about Facebook, they own Instagram, they own WhatsApp, they own Oculus Rift. They're getting into VR and augmented reality, and they're getting into cryptocurrency even with that, and a bunch of other things. So this company is heavily diversified, and people nowadays, they're on their phones nonstop. I post something on Instagram, and within 30 seconds, I already had 40 people view it. So I like this company. I think it's a great longer term investment. Not saying you should buy it or buy it right now. What I say is not financial advice. You guys have to do your own due diligence, because I'm wrong sometimes. And, and that's that. I can be wrong, but this is my thoughts. I personally think Zuckerberg may become the richest man in the world one day, and I think Facebook stock is set to go higher. That's my opinion. The charts tell me so as well. The fundamentals tell me so. So we shall see how it goes. But on the contrary, Facebook does have a little bit of pushback from a lot of lawmakers and stuff. They're trying to break up the company. They're trying to sue the company for antitrust, because Facebook tends to buy out all the competitors and just crush the competition. That's Zuckerberg's thing. And a lot of lawmakers and governments and stuff, they don't like that. So there's a lot of pushback against Facebook. And that's also why the stock's been held back for a while, because of all this pushback. But, as these lawsuits, they get resolved, or it gets pushed in the back of people's minds, sometimes it's actually can be a good thing. The bad news can actually be a good thing, because the bad news held the stock back. And so it's already priced in. Whereas when good news starts to come out, or when this bad news gets resolved, the stock tends to perform very well. And, it's kind of like the coronavirus. When the market dropped, all the bad news was priced in. The market dropped 35%. All the bad news was priced in. So at that point, it had nowhere to go but higher because all the bad news was priced in, and that's what happened. And only good news can come from now on. And I think some similar situation can happen with Facebook. Let's take a look at Tesla quickly. I know a lot of people are following this stock. I know a lot of people know that I'm not a fan of this stock. I think it's a massive bubble. I think it's extremely overpriced fundamentally. And, you know, Facebook, like I said, you know, Facebook made over $11 billion profit in the last quarter. Tesla in the last 15 years made only around $1 billion in profit. In the last 15 years, Facebook made 11 billion in 3 months. Fundamentally, Tesla is extremely overvalued. I'm not sure exactly what people see in this company other than hype from Elon Musk and whatnot, but you never know. I'm not saying don't buy it or anything, but chart looks meh, but we're holding some moving averages here. So that could be a good sign. There still is a potential that this is a bear flag on the weekly. It doesn't look terrible right now. I would say that. We've had a double bottom on the daily. We've held up. Bulls are trying to set a higher low here. What the bulls want is the bulls want to move up here. They want to break this resistance area, which has been a resistance area for time. As you can see, always setting lower highs up here. Very clear resistance area. If the bulls can set this as a higher low and move up past there will probably be a little bit of a short squeeze on Tesla. And the next area we'd be looking at is the previous support area around here, which would be close to $800. So I think that's possible. I'm not saying you should buy. Again, I'm not a fan of this stock. I'm just, based on my analysis, if the bulls find this higher low and they start pushing up, they're very likely to break this resistance area. And the next resistances we're going to want to test is that 50-day moving average around $721 right now. And then further that, we're going to want to test this gap area around 770 or so, and then the previous support area around the $800 mark. So that's what we're looking at on Tesla. So we'll see. The bulls, obviously, they want to break this critical resistance area, and the bears want this to be a bear flag. There's no confirmation either way yet. It's good to wait for confirmation before making a move. Looking at Apple. Apple's looking good overall. It was looking like a bear flag, but the bear flag was negated. We're moving back up to the upper Bollinger Band on the weekly. As you can see, it's overall very high performing, top performing stock, Apple, for very good reason. They make billions and billions of dollars. Getting a little bit overextended here, but no real red flags. We just passed above the 50-day moving average, the 100-day moving average, the 150-day moving average, and it held the 200-day moving average as a support area before. It's been in consolidation since, I think it's similar to Facebook, since August. Okay, we've hit that high recently. It did pull back, but overall it's been in a monthly consolidation pattern for a while. We set that higher low on the monthly. Bulls are going to want to set that higher high and move up to the upper Bollinger Band, which currently sits around $150 on the monthly chart. That's what we're looking for. It looks promising. It's looking healthy. I don't see any red flags there. And Apple obviously is one of the top companies in the world. They make a lot of money. I don't think this stock is in a bubble. A lot of these tech stocks, you know, they're a bit overpriced considering typical valuation metrics over the past years. Whereas, you know, I think Apple's PE ratio, I think it's somewhere around 35 or so, 38 or something. It's somewhere in the 30s, which is considered typically high in comparison to history, where the average PE ratio would sit around 20 or so on the S&P 500. So it is a little bit high, but the thing with Apple is that they're sitting on $200 billion in cash, almost in cash. These guys are making so much money, you know, and when you got a company with financials and fundamentals that are that good, you know, it would make sense to overpay for them a little bit. So obviously there's risks with any stock, and that's what you have to remember. It doesn't matter which company you invest in. There's a risk with any company, and somebody, you know, maybe 10 years ago would have thought BlackBerry was unstoppable. It was too big to fail. And guess what? We all know what happened to BlackBerry. It crumbled. And so anything could happen to any stock, and every stock is risky no matter what. But of course, fundamentally, Facebook and Apple are very fundamentally sound as of now. Shopify, looking on the daily, we're testing that 50-day moving average, 1537, the yellow line. That's the 50-day moving average. The bulls are going to want to bust through this. We're looking at the next resistance area. You see the big gap over here. There's this huge gap, and that was a breakdown gap. So we're looking to test that area as a resistance area, and the bulls are obviously going to want to fill that gap to show strength. So are we going to move up to test this next resistance area? The skies are pretty clear from here. After breaking this critical resistance, you see we kept testing it. 1 test, 2 tests, 3 tests, 4, 5, 6, 7, and we busted it through today. So the chart's looking pretty good. We had what appeared to be somewhat of a bearish head and shoulders. We had the shoulder, the head, and a little bit of another shoulder, and we broke bearish, and it was a fake out, and the bulls came running with it. Shorts are getting squeezed right now on Shopify. Chart looks good overall. We look at this yellow line, the 50-week moving average, and that's been holding as a support all the way back since 2016. So it has continued to hold as support, and in the past, every single time it's bounced off this yellow line, it has been a significant bullish buying opportunity, and I can see it continuing to be the same. Although Shopify fundamentally, while it is fundamentally sound, it is significantly overpriced in comparison to all these other tech names that I'm mentioning. Their PE ratio right now sits around 440, which is quite high. Obviously, a lot of people believe in Shopify and believe there's still a lot of growth on the table for this company. They partnered up with Google to sell things through YouTube. They partnered up with TikTok to sell things through TikTok. They partnered up with Instagram to sell things through Instagram and Facebook and many other partners. And this company is growing. They're getting a lot of partnerships. They're setting up a distribution network that's similar to what Amazon's doing with Amazon distribution. So this is a growing company. Again, it is overpriced. This is significantly overpriced, mind you, but people believe in the company. People see a lot of growth potential. It is the largest company in Canada by market cap today, to my knowledge. It's very close with Royal Bank. I don't actually know which first. It did pass Royal Bank. I don't know if it's still ahead of Royal Bank or not, but it's very close. They're hand in hand with each other for the top spot of the biggest company in Canada. I do like this stock. The chart looks good overall right now. You look on the monthly, no real red flags here. We've had a breakout. We had a pullback. We retested the breakout area. We had the upper wick of buying the dip, and now we are looking to run back up to that upper Bollinger Band. And we were 1900 on this stock a couple months ago. We very well can head back up there, but we're going to take it step by step. Right now, we're looking at breaking this 50-day moving average, moving up to fill this gap, and we will go from there if that happens. So we shall see. Google, I was looking at Google. I find Google is one of the more overextended stocks, especially when you look on the monthly. It's almost this little bit of a parabolic move. We're at a 79 RSI on the monthly. I don't think it's a sell, but I'm not sure if it's a buy right now. I think I would hold off on Google. As much as I like this company, I think I would probably hold off on it a little bit, as it's a little overbought. I would like to see it consolidate because it's one of the only companies that didn't really pull back in March. It held on, it held strong, but that is for a reason. Their fundamentals are very pretty. When you look at Google, it's a growing company. It's a big company. They run the world. No real red flags here other than I would ideally like to see it consolidate for a bit before I enter a position personally. And I would say the same for Microsoft. But again, you look back, Microsoft is just a really top performing stock. I mean, you don't want to bet against it. Between Microsoft and Apple, they're the largest companies in the world. I think in terms of market cap, Apple is around $2.3 trillion US. Google is around $1.5 trillion US. Microsoft is around $1.9 trillion US. Amazon, which I don't have over here, is around 1.6 or $1.7 trillion US. So those are the top companies in the world. I believe Facebook is headed up to the trillions. And Facebook right now is $890 billion. I would not be surprised to see it hit $1 trillion soon. And that means if it did hit $1 trillion, you're seeing around a 13% return, which would bring Facebook stock to around $345, $350 a share. I very much can see that happening. The analyst price targets are around that area as well, and upwards of $400 plus. But we shall see. None of this is for sure. Okay, this is all, we're looking at charts, we're looking at fundamentals. I'm giving you a little bit of my opinion. Nothing is for sure. It's always risky. Do your own due diligence, and anything you do, you make your own financial decisions at the end, and you are taking on the risk yourself. Yeah, I mean, I have some of these other stocks here in the US market. And again, part of the reason why I'm looking at the US market right now, and, you know, I've been in the Canadian market for a long time. The thing is, I'm just not seeing as much opportunity on the Canadian side right now. There's a lot of good companies on the Canadian side. You know, the banks are doing very well. You know, a lot of these telecoms are starting to do well. They pay very high dividends. Hydro One's looking good. GFL is looking good. GFL is you know, they're the guys with the garbage trucks and stuff like that, but they also do quite a bit of other things. That stock's looking good overall. There is a lot of stocks that are looking good on the Canadian market as well, and I'm going to get more into that as I get into further videos. But right now, I think this is where the shine is. I think these names are really, they took a pause for a while. As you can see, Facebook took the pause, Apple took the pause, and I think they're ready to really make their next leg up. And as you can see, these are very top performing stocks. So I don't expect it to change right now, but of course, again, anything could happen. I don't think I'm going to get much further into this. I'll just mention this SLS quick. I think I'm really done with this. I don't even want to talk about it anymore because this stock has just been a nightmare, really. I don't have it. I got rid of it this is the day I got rid of it. Thankfully, you're going to say, why would you sell at a loss? And I sold at a loss, and a big loss. I took a big loss on this stock. Why would you sell at a loss? Well, this is why. It went a lot lower. And, you know, there's really no signs that it's done dropping as of yet. You know, this could be making a little bit of a mini bear flag. I mean, we did break yesterday's low, and we had a little bit of an upper wick of buying the dip, but it's really not showing that much strength as of now. We haven't even touched the 4-day moving average. And, you know, I find stocks touch that 4-day moving average almost every day, and it hasn't even touched it. So I think if the stock starts moving up, testing the 4-day and moving above the 4-day, then it can see some gains or a little bit of a rebound. But as of now, and that might be tomorrow, maybe tomorrow we're going to make that move up because it is oversold. And, you know, a lot of people who would have probably sold by now, you know. But again, the chart is just not very pretty. If you do draw a line, I don't know if I have it on here where I can draw the line. I can, but I'm just not going to do it right now. There is a support line it's riding around here, and it's holding above that. So that is a fairly good sign. It's still on a monthly uptrend if you look at it that way, where we have our low, high, higher low, lower high, but higher low, higher high. I don't know. Could we consider this a higher low and then a lower high and then a lower low? We might have seen that change in the trend. But yeah, really this was, I mean, it's not too pretty. We had a double top here, and it just was an absolute breakdown. Not very pretty over there. Ethereum holding up well. I don't see any red flags here. I expect it to go higher. Apparently, Visa announced that they're going to be settling a lot of transactions in Ethereum on the Ethereum blockchain. And obviously, that would send Ethereum price higher, which is happening right now. Is it possible, and here's a good question, that Ethereum tops Bitcoin's market cap one day? Bitcoin right now is worth about $1 trillion. That's the total market cap in US dollars. Ethereum, to my knowledge, is just over $200 billion US. So if Ethereum went to about $10,000 a share, then it would be about the equivalent of the market cap of Bitcoin, or perhaps a little bit more at that point. You know, and we're going to see, can Ethereum top Bitcoin one day? That would be crazy if it happens. Obviously, we're still a ways to go. So talking about that would seem a little bit outrageous, but I think if Visa and all these other guys start jumping on board, Ethereum's really probably going to do well. And, you know, looking at the technology wise, Bitcoin transactions are very slow, can only process so many transactions. And it requires so much electricity to make the network work, whereas Ethereum requires a lot less electricity. The transactions are a lot faster, and they're still continuing to improve the network, and now they're even moving to proof of stake. So I think these are some big news for Ethereum. I think it does have a lot of potential. So if I was investing in a cryptocurrency, which I'm not, I feel like cryptocurrencies are a little too risky for my personal taste. But if I was investing into one, I probably would be picking Ethereum right now based on what I see. There's a few other ones I've been looking at, and here's the crypto over here. I'm liking Cake, and my friend told me about this when it was like 12 bucks, and now it's 21. I probably should have bought it. I looked at their site. Pancake Swap seems very interesting. Seems like it has decent potential, although it's gone up quite a bit already. XRP breaking out. Looks like we got a little bit of a bull flag on the daily over here on XRP. I wouldn't put it past. We're hitting all-time highs. We're holding the previous all-time high as a support area. No real red flags here on XRP. You know, I don't know if they settled the lawsuit or not or recently, and maybe that's why it's gone up, or maybe there's some progress in that. I haven't really looked into it, but just based on the chart, I mean, it's looking pretty good. Oh, I didn't know this, but our all-time high, I guess, is $1.50. I could be wrong. I don't think I have all the data for XRP. This is on Binance. I think XRP goes back in history before 2018, so I probably don't have all the data. So I think maybe it did hit higher. Maybe it did hit $3 at one point, if I remember correctly, actually. So we're not at all-time highs, but chart's looking pretty good overall. We had a cup and handle on the weekly. Look at that, very clear. Cup, handle, breakout. Beautiful. Doubled your money if you bought on the breakout of this inside bar right over there. Looking good overall. I think if I was to be buying some cryptocurrency, and I thought XRP would drop to zero, but before, when they announced this lawsuit and stuff, but I did see a volume spike at the lows when I was watching it, and it hit 17 cents, and I actually called that low, and I said that's the low, and it did. That held as the low. I didn't think it would be done, but I thought it would at least rebound, but it held as the low. It made that higher low, and it set this nice monthly uptrend, weekly uptrend, looking good overall. No real red flags there as far as I can see right now. Those are the cryptos that I'm watching. Just a few other stocks before I head out. These are some of the other stocks I got my eyes on. Not all of these I'm trading or anything, but some of these I've just been keeping my eye on. Berkshire Hathaway, I like this stock, breaking out to all-time highs. A good value stock. They pay dividends. They've got a very good history of performance. I think this is one of the buy and hold longer term good investments. Fiverr is a good one to keep your eyes on. The valuation isn't that high. The stock is overpriced based on earnings and profits and whatnot, but the market cap itself isn't that high, and I think there is a lot of potential room for growth over there on Fiverr. But it's one of those growth stocks that would be affected by the bond yields. So if bond yields start to edge up again, some of these stocks might take a little bit of a hurting from that. Lockheed Martin, I really like this stock. Great value stock. I think the PE ratio is only around 14 or 15. They pay a fairly nice dividend, around 2% or so. It's in the space sector. The space sector is taking off this year. Space sector is a big one you want to keep your eyes on. Kathy Woods with the ETF. I'm not a big fan of Kathy Woods' picks because I find she picks a lot of bubble stocks or stocks that are overpriced. But this is one of the stocks she did pick and throw in her space ETF. Lockheed Martin, I think there's a lot of potential there. I think it's a value stock. I wouldn't put my eyes past it. I would keep an eye on that one. I think it could see a lot of gains. And not only are they involved in space, but they're also involved in, they make the jets for the military. You know, they make the F-1 fighter jets and quite a few other things. So I would keep my eye on that stock. That's just one of the companies. They have the steady revenue from the military, now from space, from other things. Now they're getting the hype. Now they're getting Kathy Woods and their value on top of it. Something to keep your eyes on over there. And I think really that's what I'm going to leave with talking about today. And the blue list is just my more Canadian safer stocks list over here, just so you can see some of these stocks. Gold, starting to see a little bit of a rebound in gold. You know, and this is Barrick Gold over there. It took a beating though. Barrick Gold took a beating. It was 40 bucks. dropped as low as 23. We're seeing a little bit of a recovery now, but really it's still on a downtrend. But are we finding a bottom here? And that's the question. Did we set our higher weekly low and we got a little bit of higher weekly high? So perhaps this is the bottom for now, and the trend is starting to change. So keep your eye on gold stocks because they did get oversold. They did drop a lot, and maybe there's some opportunity for a little bit of a recovery there. A few of these other stocks I'm watching, I like Dollarama. Dollarama is one of those stocks has been consolidating for years. When you look at it, it's double bottomed on the monthly. You look back 2018, we're hitting the price that it was in 2018. It had 2 years of consolidation, had the double bottom on the monthly. We're trying to break out on the monthly to all-time highs. This has historically been a very good performing stock. I could see it continuing to be that way. Yeah, and quite a few of these others are in the very similar boat as Dollarama. Bell Canada in this consolidation pattern for years, since 2015. It's been the same price since 2014, December 2014. That's a long time where it hasn't really moved up in price. But I do see some progress here in the chart. This was the coronavirus. We set that low, but we had a huge lower wick of buying the dip. We're setting that higher low on the monthly. I saw what appeared to be a little bit of an inverse head and shoulders pattern on the weekly. Not totally, but I just saw it a little bit. Actually, it was on the daily right over here where I saw. I think this is it. Kind of not totally clear, but a little bit of the formation is there. It's showing some strength. It's riding the 4-day moving average. I don't think you're going to see some massive gains out of this stock, but you're getting a 6% dividend. I think when you look at the yearly, this is the tech bubble. I don't know why it shows this high. I don't think Bell ever went that high. My mom worked at the company and she would have told me if it ever went that high. They merged with Nortel back in the day. Or no, sorry, they separated and Nortel became its own company and Nortel went to zero back in the day. Even the dot-com bubble, it crashed. I don't think this ever happened exactly. I'm not sure why it shows like that. So I would think that data is incorrect, but I could be wrong. Maybe it did skyrocket during the tech bubble. But looking on the 12-month, each candlestick represents 1 year. Now looking here, this is where Bell Canada looks nice. We're moving back above the 4-year moving average, the 8-year moving average. We're holding that as a support. We've got what appears to be a yearly bull flag. It's been forming since 2015. If we start seeing a little bit more of a push, I could see Bell Canada breaking out, headed higher, and then you get the dividend on top of that. But Bell does have a decent amount of debt, but I do see they are pulling some decent profits. They pay a nice dividend, and I think they're going to be seeing some growth from 5G. So I think there is potential there as well. I think I'm going to stop there today. I'm going to head out. Thank you for watching the video. I hope you enjoyed and have a great day.